Good morning, everyone. It is Monday, July 7th. You got Ben Buckner and Dan Bosse with Ag Resource Company in Chicago. Sort of the post-July 4th holiday, always kind of a key mover of the market, especially price-wise and trend-wise. And so we left last week with, some ideas about potential trade deals, India being one of them, Vietnam being another. Rumors about possible Chinese buying at some point, I think in the second half of 2025. And of course, we knew we were going to have 12 weather forecast updates over the long weekend. We come back, we don't have any concrete evidence of Chinese demand. Still no clarity on trade deals, and the forecast, if anything, has probably trended a little more favorable for central U.S. row crops as temperature guidance gets a little cooler. So the market's understandably down sharply today. And also in the background, probably an OPEC crude oil production hike. So it's not a lot of news or input for the bulls to sink their teeth into. So there's a lot to get through, Dan. I'll just kind of pass it off to you and break it down this morning.
Well, that's right, Ben. This is one of the most important weekends coming back, in particular with July 4th being on a Friday. I think that helped some of the short covering late last week. And I'm now more pessimistic on a U.S.-China deal. I know those rumors were around, but the more cans you kick, the more dust you built up. It seems to me that any U.S.-China deal is at the back of the line. So I really believe that maybe President Trump will have to go to Beijing to sit down with President Xi before you got such a deal. If that trip even happened, I don't think that would be until probably much later in the year. So maybe something like the fall timeframe. So right now we're looking at trade deals ahead of the Chinese, and so that would include Vietnam. But even then, there's a lot of talk ongoing that Vietnam deal is short on specifics. There's nothing there that would really give you an idea that the U.S. Is going to get an additionality of sizable amounts of corn from Vietnam. It just means that it's left to the open market. In a lot of cases, we get undersold by South America. Looking at where we are today, I think this whole thing about world trade is important to talk about amongst all these trade deals which are now occurring. And when we look at global corn, wheat, and soybean trade, I've kind of stacked everything on top of each other. Notice the stagnation over the last 3 or 4 years, and I think this is related to China. If China's not buying their 20 or 30 million tons of corn, if China's not buying their 10 or 13 million tons of wheat, we get their routine soybean demand. Let's call it 100 to 108 million metric tons, and we just don't drive the needle up on trade. So although we are looking at these trade deals that are coming, if the pie is not expanding, then we're just getting a slice of that pie, maybe getting a little better market share. But that means that others will be more aggressive in pushing grain into the world market. That said, as we look at U.S. end stocks relative to the additional plantings and stocks, if I look at U.S. corn, soybean, and wheat end stocks, and we do have a report coming up this Friday, it's probably not going to be as large as I've highlighted there. The 25-26 is Ag Resource estimates, but nonetheless, you see that we are building stocks. This will now be a stocks accumulating year. Those stocks accumulating years are all bearish. U.S. corn, soybean, and wheat stocks will be the highest looking backwards since 2018. So, again, there's not many years that we see this kind of stocks accumulation, which is why at Ag Resource, without a Chinese deal, we think corn is sliding to $350 or $375 a bushel. Soybeans maybe $925 or $950, and the wheat market just holding in a broad range. When we look at, where we are in terms of weather as we look going forward here, this is a map showing you rainfall percentages of normal from June 1st until July 6th yesterday. So this is what I consider to be the summer growing season. Notice we do have some dryness in places of Illinois and Iowa. That good farmland ground is why we pay so much money for it, because it does hold moisture a little longer and a little more relative compared to the rest of the United States. Crops in eastern Iowa, Illinois are doing relatively well, assuming that we get rain over the next couple of weeks. Temperatures have also not been extremely hot. We've had a couple of warm days, but really nothing extreme in terms of the overall weather pattern for Midwest crops. As we look forward, the weather forecast does not have any extreme heat for the central U.S. That map to the left is 10 days anomalies. We can see some coolness across the plains, maybe a little bit of warmth in terms of the far west. But then when we look at the map to the right, this is rainfall anomalies, difference from normal over the next 2 weeks. Notice that we have above normal rainfall in a 2-week time frame for like Minnesota, eastern South Dakota, eastern North Dakota, northern Missouri, and southern Iowa. Other places in the Midwest, it's pretty close to equal. Even Illinois is going to get a good 1 to 2 inches of rain over the next couple of weeks. So we feel pretty good about what's forthcoming for major U.S. crops. When we also then try to go forward and we look at balance sheets, we at Ag Resource have raised our corn yield estimate to 184 bushels an acre. This gives us a 16.1 billion bushel crop. That is a record. And then as we look at total U.S. corn supplies, 17.5 billion bushels. We've never had a bigger pile of corn at harvest within the United States. It's a massive amount of corn. Now, whether we use China or not China is up for everybody's debate. But if we don't use Chinese demand, we have U.S. corn exports at 2.3 billion bushels because of that big Brazilian crop. That takes corn end stocks to 2.4 billion, and that would take the market down to 350 a bushel with an average farm gate price for the crop year of 365. So more bearishness, if you will, at corn, even at 425 a bushel. The only thing keeping the market relatively well supported will be basis levels relative to the crusher. U.S. crush rate stays strong. We finished last week at about $1.59 a bushel for the U.S. board crush rate. That means that the crush community will be looking for new crop soybeans. So basis levels in that time frame stay relatively well supported, and there will be opportunities, at least on new crop soybeans. And that's one of the supportive features, if you will, Ben, of the market looking longer term. So, well, Ben, of looking at the markets, we're still bearish of corn, bearish of soybeans. We see the wheat market holding in a long-term basing mood between, let's call it 510 to 550 or 560 a bushel. And we just see the markets holding with this in range. So be most bearish of corn as we think about the remainder of July.
Yeah, all good stuff. And there's not much under the hood here, I think. It is just we're looking for demand growth. That's been a struggle. And then Mother Nature just cooperating almost globally with the producer, especially in the United States. So we're hearing of record potential in places like Nebraska and Kansas, which is something we've been missing the last couple of years. So yeah, again, having to sort out through large supplies is probably the name of the game for the next 90 days. So as always, all the best in the markets. Thanks for tuning in, and we'll get at you tomorrow.